Good afternoon, everyone, and welcome to Vantage Markets Australia's The Market Open, presented by the Vantage Private Client Group here in Australia. That's me, Jeff, in Sydney, and Mark in Melbourne. Say hello, Mark.
This is Mark and Melbourne. How you going? How you doing, Jeff?
Man, I'm all right. I'm all right. Now, I heard a rumor that the weather was better in Melbourne than Sydney today. That can't be right.
I was surprised. It's like 27 degrees at the moment. I didn't believe it myself.
All right, so we've done a few of these now. We're going to run through the big events from last week. We're going to talk about what we've spotted on the calendar for this week that might be a little bit market moving. We'll talk some technicals on a couple of charts, and we'll answer some client questions. So last week, the big event was, one of the big events was the Australian employment numbers. Employment was significantly stronger than expected for the second month in a row. The unemployment rate was unchanged at 4.1%. The market was expecting it to actually rise a little bit to 4.2%, but the end result was Aussie dollar strength based off that employment report, which wasn't really that long-lived, but did exist for a little while. We saw a bounce. We also had the ECB cut Eurozone interest rates by 25 basis points. That was as broadly expected. I think the market seems more content with what the European Central Bank is going to do rather than the US Fed, but that was as expected. Markets are expecting another 3 cuts from the ECB, I think, between now and March of next year. So lower rates over there in Europe. We also saw much stronger than expected US retail sales. The retail sales acted to support the dollar, and that dollar strength was kind of a little bit of a theme for last week. This week we've got the Bank of Canada announcing on interest rates. You might notice a theme here. We're talking a lot about interest rates at the moment. We've had that kind of pivotal turning point where we've gone from a neutral cycle to a cutting cycle after recent raises, broadly because the world economy is slowing. What's the market expecting on Canada there, Mark?
They're expecting a 0.25% rate cut. So the interesting thing is, Jeff, this is sort of like a once in a decade cycle. So so we haven't seen this sort of interest rate cutting like since 2015, 16. So it's sort of a 1 year in a decade situation.
Yeah, it's an interesting time. And the central banks seem to be flagging it pretty well as well. I think, anecdotally, the Canadian Central Bank and the New Zealand Central Bank, are the two best at kind of flagging what they're going to do with interest rates. But all of them have been broadly quite good at it. There were some comments from the Reserve Bank of Australia's Deputy Governor this morning saying that the RBA will move on rates either way. So I think the hoped for Australian rate cut is not as etched in stone as it is in Europe and Canada.
We could even see the Aussie play out as the carry trade. The same thing happened back in 2017 where we had higher rates.
We could, and I mean, central banks don't tend to want to move interest rates too much in an election cycle, which I guess we're in one at the moment as well. So yeah, we'll see how that plays out. On Thursday, we've got the European, UK, and US PMI numbers. They were stronger than expected last month, so I'm expecting a little bit of mean reversion on that this month. I think they'll be a little bit weaker.
I agree. I think it will be.
I think the market would have priced in the higher levels from last month, and now it's going to be nice and soft. And I think, given the dearth of really interesting things that's going on other than the interest rates, I think the US election is going to start to become a little bit more of a market focus. It's been a bit sidelined lately because polls have got Harris and Trump pretty close. The betting market is increasing or making odds on is Trump at the minute over there in the betting markets. But in terms of the polls, I think they're fairly close. Technicals, Mark.
Let's jump straight into it. Okay, so we have here the Euro USD daily chart. So as you can see, the last 3 weeks it's been it's been dropping significantly. That's on the back of a weaker euro, stronger dollar. The European interest rates are at 3.4% at the moment. US dollar higher than that. So the, one of the biggest factors that drives currency rates is the interest rate discrepancy. So as we sort of see euro dropping rates and maybe US even holding rates dropping slower, you're going to sort of see this reaction in price. So yeah, I mean, simply put, investors would rather put their money in the US dollar and earn more interest rather than euro. So that's basically how it works. But anyways, yeah, we did find the support level there. We did print in a bullish engulfing candle, and you could even see a relief rally out of this here up to the 110.05, 1.0940 region. But the overall underlying theme for this pair is US dollar strength, especially now that elections are around the corner. Typically, we see dollar strength. So yeah, this pair is under pressure, Jeff.
It certainly is. And just to round up on that, the reason for the dollar strength around a US election is that there is a certainty in leadership. So that's what an election provides, whether you're happy with it or not.
All right. We also have here the Aussie dollar chart. Very similar to the euro, but not as bad because the Aussie rate's actually higher at the moment. So we're at 4.35. What will be interesting is if the US rates drop below the Aussie rates. We talked about the carry trade earlier, Jeff. But anyways, with this pair, we did find some support here at 0.6665, 0.6622. And we could potentially rally up to that previous high it made, that 68.24. That would be a head and shoulders pattern. If it does breach that, then we could see 0.6940s. Yeah, I mean, this pair is also under pressure around what's happening in China as well. Typically, what happens in China affects the Aussie dollar. So yeah, I mean, it depends what happens there as well.
All right, just on China before we move on, we had the People's Bank of China cut their rates on their 1 and 5 year lending rates this morning. That was again as expected, and again more rate cuts around the world. They cut both of those by 25 basis points.
Correct, yeah.
All right, let's answer some questions, Mark. The first one that we've got is can you explain rollover fees? Rollover fees are exclusively for CFDs over futures contracts. Futures settle. One of the big differences, well, the two big differences between futures and CFDs is that CFDs are traded off exchange, whereas futures are traded on exchange. The other one is that a CFD contract doesn't have an end date, whereas futures always have a settlement date. When there's a settlement date and the market is moving from one month to the next, so when the new month becomes the front month, there's generally a little bit of a gap there in price. I wouldn't say always, but close to always, there's a gap in price. That gap in price is the funding rate between the 3 months further out or the 12 or the month further out contract. And so we make an accounting adjustment in your account to account for that discrepancy in the two different contracts. Question 2, Mark, you want to grab that one?
Yep. So this is a question that's asked from a client recently. What are crypto perpetual contracts? So we newly introduced what is called a perpetual account. That type of account mainly is aimed for longer term crypto holders, typically from 5 days over. The way the account is structured is it's commission based. It has lower spreads and very competitive funding fees. So yeah, again, it's mainly aimed for those crypto holders looking to hold long term. They'll be saving in terms of overall cost compared to our other account.
Yeah, we've had a little bit of client demand on that too lately. Is people do like to hold those positions in crypto. Obviously, the difference between holding a perpetual contract versus holding physical crypto is the leverage that's involved. There's a financing fee for the leverage. But I think at the moment, in terms of the perpetual contracts, we're the cheapest provider in Australia, especially the cheapest provider that's actually licensed.
That's right. Yeah.
All right, good. Well, hope you've enjoyed that. A little bit short and sharp this week. If you have, or if you've missed it, or if you want to grab this, the content of this live stream will be available in our trading room and on our YouTube channel when we've finished. Also, within the trading room, Mark and I are logged into that all day long. So if you've got any questions, feel free to reach us either via phone, email, or through there. Also, within the trading room, we have our partners at Everest Fortune Group. There's some outsourced analysts that work exclusively in the Southeast Asian hedge fund space. They can answer questions as well, and they provide a little bit of analysis for our clients there too. We also have the weekly technical video that was posted this morning. We go through some technical analysis over different timeframes for different products. And finally, we have our private client daily update, which Mark and I write every morning. That can be either emailed to you by request, or that is also posted in the trading room. So I do urge you to log into the trading room and have a little bit of a look around if you haven't as yet. I haven't had a single negative piece of feedback on that. So, everyone else likes it. If you haven't had a look at it yet, maybe you should. In terms of us, we sometimes get asked, what is it that you guys actually do? We provide we provide the content that you see via webcast here. We write the content for the daily updates. We also help our clients. Each one of you guys out there who is a client of Vantage with a live account has either Mark or myself as a client manager. We can help with deposits and withdrawals, answer any questions about trading or about us and our platform. And if you do experience a little bit of slippage on your account, you can reach out to us and we can help out with that as well. So that's it for now. If you do want to watch this again, as I said, it'll be made available in the trading room or on our YouTube channel. Thank you so much and see you next week.
See you all next week.
See you, Mark.